It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Tuesday evening, April the 5th, 2016. We have another exciting newsletter in store for you guys tonight. We got crude, S&P, gold, and of course the euro. Markets are all setting up with excellent opportunities for tomorrow's session. They all have their own plan this evening. All the markets having some different opportunities here. We're looking forward to another great session with all of our students tomorrow in our trade room, which opens up at 8 o'clock Eastern Time. Crude is bullish after this evening's API report, but we're now trading all the way at the highs of that major bear channel that we talked about in last night's newsletter. We have a measured move, which means sellers will be looking for opportunities to sell off the highs tomorrow. We might get another leg up here. It was put on news. We'll talk about that in a moment on the oil market. The E-mini S&P is bearish with a spike in channel down this evening and a recent to-the-tick test. Say that 3 times fast. To-the-tick test of the measured move tells us this market is likely to revisit the lows sooner rather than later before correcting back into the zone above for the spike in channel tomorrow. Got a really interesting scenario here on the S&P. You're going to learn a lot about this tonight. Gold is setting up, the yellow metal setting up to be quite a bull this evening after a successful first channel test was followed by a strong bull follow-up candle. This puts a target back at range highs, and we have a long-term move back to channel rotation on the yellow metal. It's going to be interesting to see what happens on gold. Might get a trap low. We'll see here. We'll see. We'll take a look at that chart in a moment. The euro, of course, the euro currency futures is range bound this evening. We've got some news tomorrow morning. We'll talk about that in a moment. Might be waiting on the news here. But euro's range bound this evening, which means our plan is simple. Sell high, buy low, focus on failures, and use the 2-try rule tomorrow. Boy, get a great newsletter video in store for you guys and gals tonight. But remember, the only place to watch the full-length version is over here on our trading blog at sidewaysmarkets.com. If you're watching this video right now on our YouTube channel, there's a link in the description of the video, and that'll take you over here to our blog at Sideways Markets. That way you can watch the full-length version, right? It's only a small snippet on our YouTube channel. While you're here watching the newsletter, don't forget, grab your free pass. Come out and join me as a guest for a day or two, right, on your free pass here in the upper left-hand corner. Don't forget, too, I'll send you an email every evening between about 7 p.m. and 8 p.m. Eastern Time when the nightly newsletter is ready. You can join the mailing list in the lower left-hand corner. And then, of course, obviously, below the video tonight, don't forget, you can download all the charts you see me using in tonight's video. You can download those charts and use them tomorrow on your own time. Follow that link right below the video. And then over on the right-hand side, you can learn more about what it means to be a student here at School of Trade by joining our free trial. And you can always contact us 24/7, 365 via a live support on the right-hand side of the blog. Give me a call here in the office, right? You can use that live support, ask lots of questions here about any topics that are trading related. Ready to rock and roll? Get your helmet on, seatbelts fastened. Get another busy report for us. Before we jump into charts, though, let's take a look at the news schedule for tomorrow. Tomorrow's Wednesday, April the 6th. We've got the petroleum status report at 10:30 a.m., crude oil inventories. And we have the FOMC meeting minutes tomorrow. I would assume that the meeting minutes are what are holding up the euro here this evening. You know, I don't know. I really could care less, to be honest with you. We know we'll trade what the market gives us, right? We don't worry about the why. We worry about the when, the where, the what. Right? And of course, we know tomorrow morning, the big news, if you're an oil trader like myself, is going to be the petroleum status report. Now, this evening, we got the API report at 4:30 p.m. on Tuesday evening. We'll talk about that in a moment. Tomorrow is the follow-up. The DOE report tomorrow, the Department of Energy has their petroleum status report tomorrow at 10:30 a.m. Eastern Time. Now, remember, on Wednesdays after 10:15, trading oil becomes gambling, so be careful tomorrow after 10:15 a.m. I do not recommend new traders trading the oil report on 10:30. It's very misleading. It looks very easy to try to catch some of those big moves, but the only way to practice trading news is on a live account. Talk about an expensive hobby, right, to practice, right? I always recommend people avoid the news, no matter how experienced you are, just because, remember, although volume is high, volatility is high, and liquidity is low. You're not going to be able to rely on getting in and out of trades, especially using a stop loss during those nasty, volatile swings that happen during those major news events. So tomorrow morning in our trade room, trading crude, will be sitting on hands after 10:15 a.m. Plenty of other markets out there to be trading after 10:15. So button it up after 10:15, and then in all reality, usually afternoon session on Wednesdays are usually a bunch of gamblers. So like I said, after 10:15 on Wednesday mornings, it is considered gambling in my book. Crude's a great market, but every Wednesday we got to be careful around that inventory report. Tomorrow, of course, we get the FOMC announcement meeting minutes, right? Not the announcement itself, but the minutes, right? 2 weeks after the announcement comes out, we get a chance to peel through all the meeting minutes. Tomorrow at 2 o'clock, they'll release those meeting minutes, and of course, it will give all the analysts a chance to analyze, right, what they said or what they didn't say in the announcement, right? I'll be, of course, sure to interpret those tomorrow. We'll talk more about that in tomorrow night's newsletter once I get a chance to read those myself. We'll touch on that tomorrow. But we do know that is a Red Star news report. Now, the afternoon session is always, and when I say afternoon session, I mean after 11:30 a.m. Eastern time. The afternoon session is always lower reliability. So if you want my opinion, if you're a new trader, try to find trades in that overlap between London and the U.S. session. So afternoon London session, U.S. morning session. It's about 7 a.m. until 11:30 a.m. Eastern Standard Time. Everything outside of that's going to be lower volume. And I'm always a big believer that as the day gets older, people take bigger risks. They don't do things the right way, right? It's just like driving late at night. You're tired, right? You're unable to make the best decision. So tomorrow afternoon might not be the afternoon to be trading, right? We're going to see how this comes out tomorrow. We know 2 o'clock Eastern time is that news report. I'm always a big fan of getting my trades out of the way in that morning trading session. You got the plan for tomorrow. Careful trading around that news. Don't forget, we specialize in protecting all those new traders from all the common pitfalls in our beginner's course here at School of Trade. We'll talk about all the economic news and how we trade around the news in the beginner's course. All right, let's jump into some charts here. Crude oil is bullish after this evening's API report, but we're now trading at the highs of the major bear channel and into a measured move, which means sellers will be looking for opportunities off these highs. Boy, oh boy, I'm impressed here. I was expecting this evening to have to talk about the fact that we had to make it back up to those highs before we sell it back down. Now remember, this is where we were in last night's newsletter, right? Here's where we were in last night's newsletter, if you recall, and my exact words were, it's going to be tough selling down here. And you can see, boy, the sellers kept trying to send it lower, but nobody really had any interest. If you were a day trader on this today, you were looking at a bullish market all day, right? It was pretty much a bullish market all morning. On this slower time frame chart, though, as you can see, though, they're not getting anywhere, right? Anywhere going lower here. And then, of course, a measured move, right, into the high of that long-term channel. So exactly what we talked about in last night's newsletter. This is why it's so important to try to at least watch your market in every night's newsletter. I know you guys are busy. I know the entire video is long, but I cover 4 markets. So if you can't be here for the whole entire video every evening, try to be here for the market that you like trading the most. Last night on the oil market, we talked about the fact that we were ideally waiting for a price to get back up to the high of this major bear channel, and look where we are now, all the way back up to the highs of that bear channel. Now, we did have that, right? We did have that news tonight fuel this market going higher. So I won't be surprised if we see one more leg higher. We have a major bear channel, a bear flag, inventory news, and a measured move on the chart tonight. The major bear channel tells us to sell the highs using failures into strength into continuations. So here we are, right? There's the low of that bear channel. Here's the high of that bear channel. Would you believe it if I told you this bear channel started a week ago, Wednesday, after the DOE report came out last Wednesday? Yeah, just under a week ago, last Wednesday afternoon after the inventory report came out. If you recall, what happened was last Wednesday, the market spiked higher, right, into the inventory report and then collapsed right down in. And right now we are back up at the high. Not drawn to scale, by the way. Right, we're right back at the high of that long-term bear channel, right? As you can assume, a lot of this does happen quite a bit where the economic news leads into the highs of these areas, and then of course we're looking for failures into strength, right, into continuations back down. So bottom line is, this goes for any market. This is not just crude oil. We're looking at a bear market here, bear channel. We've rotated from the highs down to the lows, back to the highs, down to the lows, back to the highs. And if you watch my newsletter, you probably can finish this sentence. What are we looking for right now? We're looking for failures, right? What type of failures? Buyer failure, right? Failure into strength. Strength will give us pullbacks, pullbacks back to the low, right? Pullbacks back to the low. Now, I couldn't tell you where that failure is going to come. If I had it my choice, right? If the crude market called me up and said, "Hey JJ, where you been, man? I need some direction tomorrow," I would say, "Hey, could you go a little bit higher for me? I would love to run out some of these long-term sellers, because you know there are some swing sellers up here, right? You have to assume there are some traders, right, that trade a slower time frame than you, and so they sold the high and they're just waiting for this price to go back to 20, right? They're holding their positions right now, and so they have their stops sitting up here, right? Now, what's going to happen if we run these sellers, right, out of the market? Well, when this thing takes off the downside, they're going to have to jump back in. So that's going to help me, right? That's going to help my trades go lower as well. So if I had my choice, I'd look for a resistance area overhead, and that's where I'd start the cycle from there, right? So buyer failure into strength, strength into continuation. Be on the lookout. The top of that channel will be support, right? So you just want to be aware of that. It shouldn't hold very long, right? Unless, of course, we get a full-blown reversal. If we do get it to hold with strength, right, off of the high of that channel, that's a really big clue that we may be looking for a trap at this high, right, and then back down again, right? That does happen from time to time, right? We'll have to wait and see what it looks at that time. But there's a big old bullseye, though, at that point. There's a big bullseye all the way down at that low and then down at the channel low from there, okay? So that's the ideal situation. Trap high into buyer failure, into strength, and then, of course, continuations right back down. If you want to be a buyer on this, you want to look for that buying opportunity now after we hold the high, right, of that channel. You know, it doesn't happen very often. Again, you know, markets tend to keep moving the direction that they've been trending in. But in case that does happen, that's when a buyer says, "Ooh, all right, sounds good to me." The moving average, of course, will come back around, right? Failure into strength, strength into pullbacks, right? Pullbacks back up to that high. Not to worry, I'm going to teach you all of those details in our intermediate course, and then we'll do it all together in our advanced course in the trade room. All right, so we have the major bear channel. We're up at the highs right now, up around these highs here. Again, I have no idea where it's going to do this, but my plan is to look for buyers try to buy that pullback, failure into strength, strength into pullbacks, right? And of course, targets now all the way back down at that low, 35.24. Now, we have some support waiting for us below. We have a gap waiting to get filled here, 36.15. We have a key news support level at 36.03. Minor swing at 35.90. A little bit of a triangle here. You know, the point of that triangle, that will also be a key level of support. And then, of course, the ultimate target for the sellers tomorrow will be back down at the low of that 35.24 range. And then, of course, all the way back down to the low of the channel from there. One step at a time, okay? Want to sell the high of that bear channel. Now, as you can see here, this measured move, let's keep talking here. The bear flag broke higher, right? Here's a bear flag. Now, bear flags typically break lower, right? They hit the high and they typically break down from there, right? So bear flag broke higher instead of breaking lower. This tells us to expect two legs up. And that was also conveniently accomplished by this evening's API report at 4:30, which gives us support at 36.03. The measured move is resistance, but the news was used to get to that resistance area. So I'm going to expect these buyers are probably not done yet. So here we go. We get that bear flag, Now, what do we know about bear flags? We know that the bear flag should have broken down right there, right? That's where that bear flag should have broken down, and we should have revisited those lows.